Now, part of that fastest growing region arguably comes from the Philippines using its new sovereign wealth fund to strengthen economic ties with its neighbours. It's called the Maharlika Investment Fund. Bloomberg reports that it recently signed a deal with a Thai conglomerate, creating an equity fund to invest in Philippine agriculture, e-commerce and green energy, hoping that the fund grows to $1 billion US. The fund was founded only 2 years ago. It's got the goal of securing the Philippine economy. Rafael is the chief executive of the Maharlika Investment Fund. Sir, I'm grateful that you got up really early. Thank you very much. I suppose you're used to having to deal with New York, aren't you? And the US, having to get up early and go to bed late.
Indeed.
People get used to it in this part of the world. And look, I'm curious. As sovereign wealth funds go, it is small. And I wonder what is the purpose beyond picking and choosing winners within the local economy?
Well, primarily the fund was created as the collaborative vehicle of government to attract foreign direct investments. And in our case, we've got a twin mandate of social impact and profits. And basically, that's what we're doing. We are aiming basically for investing domestically. We're steering this as a national development fund. And once we're able to generate surplus financial assets, then we will begin crossing the border.
There are huge potential assets here to invest in. But I always worry in countries, I mean, it's number 33 on the corruption index list. That, I always worry that the money gets funded into the wrong companies because somebody knew somebody. And so it's the safeguards that are important.
Indeed, indeed. And we've set those safeguards basically by way of risk limits, and also have identified the sectors, and that's basically what we're executing now.
What are your main topics and goals in terms of areas?
Well, energy security,
yeah,
food security, mining, basically, of critical minerals, and we're also aiming for broadband connectivity across the nation.
The difficulty, of course, is with the new administration in Washington, markets are highly volatile. You are taking stakes in individual companies. It's almost like, well, not almost, it is, the government's PE, I mean, in private equity fund, in a sense, isn't it?
Indeed.
How much challenging is it going to be for the Philippines with the new Trump administration?
I don't think it's going to be an issue because we're really focused domestically, and hence, regardless of what the Trump administration's policies are going to be.
But if you talk about the general economy here for the Philippines,
yes,
you're not going to be too badly hit by tariffs. But if China is hit, China slows down, the whole of Southeast Asia then slows down. By definition, you will be caught up in that draft.
Indeed, indeed. And it would most likely be in two areas. One would be our export and imports. So hence that will be directly impacting our GDP from the perspective of trade deficits. And second would be, China's basically our third trading partner. And therefore any weakness in that economy could in fact impact that export demand.
The one thing that comes to me when I've been here, I've been here before, but it's the speed of growth. It is the incredible vibrancy of the youth and the employment. But it's also the enormous infrastructure challenges that you have here, which are off the charts.
Indeed.
How do you hope to help that?
Well, part of our mandate basically is to invest in these. So it's really about catalyzing capital formation, and that's what we have been doing. We're investing in energy infrastructure, both in the main grid and also when it comes to small power grids in the islands. And second will be mining, which has got a direct impact basically on poverty alleviation.
Well, the lights are still on behind us. Thank you very much for joining us this morning. Getting up early, I'm extremely grateful that you did so. It is only... There's coffee and donuts, so please do go and enjoy some. Thank you very much indeed.